The market is falling. Again. Headlines scream panic. Social media is flooded with fear. And everyone's asking the same question. Is this the beginning of another crash? But what if I told you, this moment, right here, right now, might be the biggest opportunity you'll ever witness? That this chaos could actually be the birth of legends. Let's unpack this. In 2024 and now early 2025, global markets have been on shaky ground. The S&P 500 had an insane run in 2023, fueled by AI hype and big tech dominance. But 2025, reality is hitting hard. Interest rates are still high. Consumer spending is slowing. Geopolitical tensions, from the Red Sea to Taiwan, are boiling. And countries like Germany and Japan are already whispering the word recession. Even India's stock market, which showed incredible resilience in 2023, is finally feeling the pressure. FIIs, foreign institutional investors, are pulling out billions, and retail investors are beginning to panic. But here's where it gets interesting. This is not a crash. This is a correction, a rebalancing. Every bubble, every rally, every bull run needs a pause. And that pause is where real money is made. Let's look at 2020. When the pandemic crashed, markets, most people sold in fear. But the ones who understood the cycle, they invested. And they didn't just survive, they became millionaires. The problem is, we've become addicted to green candles. If the market isn't flying, we feel like we're losing. But the truth is, the market is meant to bleed sometimes. That's how it heals. Now, let's talk current data. In the last 60 days, the Nifty 50 has dropped nearly 5%. Small cap and mid cap funds are facing huge corrections, some over 10-12%. IPOs are getting weaker responses. Tech layoffs are rising again, especially in US firms. But here's the hidden truth. Corporate earnings aren't collapsing. Yes, they've slowed, but they're not crashing. In fact, strong balance sheets are still being reported across sectors like banking, manufacturing, and infrastructure. So what does that mean? It means the market isn't dying. It's digesting.
Big players are booking profits. Valuations are cooling down. And the weak hands are being shaken out. Which brings us to you. What should you do right now? 1. Don't panic sell. If you have fundamentally strong stocks, don't throw them away during a dip. 2. Start SIPs if you haven't. This is literally the best time to accumulate. Every fall gives you more units. It's like buying discounts every month. 3. Re-evaluate your portfolio. Are you overexposed to hyped sectors? Now's the time to shift to value. 4. Keep cash ready. Not because you're waiting for the bottom, because opportunities don't knock twice. Let's be brutally honest. Nobody can predict the bottom. But smart investors don't wait for the bottom. They scale in. They buy during pain, not comfort. And look, this doesn't mean throw all your savings in blindly. This means learn, observe, and prepare. Because once the market starts rising again, and it will, you don't want to be the person who says, I wish I had bought during the dip. Now here's the psychological part most people don't understand. Fear is contagious. If everyone around you is scared, you start doubting your own strategy. You feel FOMO during the highs and regret during the lows. But the best investors, they go against emotion. They follow data. That's why you need to ask yourself, are you investing based on headlines or on insight? Because here's what the data says, India is still projected to be the fastest growing major economy in the world this year. Government spending on infra is at an all-time high. The PLI schemes, production-linked incentives, are attracting global companies to set up in India. And domestic retail participation in markets is the highest it's ever been. This isn't the end. It's the calm before the next wave. So stop thinking like a trader. Start thinking like an investor. Zoom out. What you're feeling right now, this fear, this confusion, it's not a signal to run. It's a signal to rise, because legends are made in the red, not the green. So the next time you hear that the market is crashing, smile, Because while others panic, you're building. And if you still don't believe in cycles, just look back at history. 2008. The world saw the worst financial crisis in decades. Banks collapsed. Stocks plummeted. Everyone thought, it's over. But what happened next? Between 2009 and 2020, markets experienced one of the longest bull runs in history. And guess who benefited? Not the ones who sold in fear, but the ones who stayed. Who learned? Who held on? Fear always looks big in the short term. But in the long run, it's just a page in the story. Now let's talk about AI and tech layoffs. People think it's all doom. That jobs are being lost. That companies are failing. But here's the truth, technology doesn't kill opportunity. It just shifts it. Yes, automation is replacing some jobs. But at the same time, new sectors are emerging. Data science, green energy, robotics, digital finance, cybersecurity. The stock market responds to change. And change is never smooth. But it always leads to innovation. In fact, during periods of chaos, the most revolutionary companies are born. Apple doubled down after the dot-com crash. Tesla rose after the 2008 collapse. Nvidia soared when others doubted AI. So if you're an investor, this isn't a time to panic. This is a time to study the future. Ask yourself, what industries will dominate the next 10 years? Which companies are solving real-world problems? Where is the world heading, and how can I ride that wave? That's what the smart money is doing right now. While retail investors scream, the quiet ones are accumulating. Now, I want to speak directly to you. Maybe you've lost money recently. Maybe you're wondering if this whole investment thing is even worth it. Maybe you're tired. But let me tell you something powerful. You only lose if you stop playing. You only fail if you let fear own your future. The most successful investors, they made their biggest moves when others froze. They knew something simple, something timeless. The market isn't your enemy. Your emotions are. And if you can master them, you don't just survive this dip, you come out of it stronger, smarter, richer, and unstoppable. So here's your roadmap from here. Start small, but start now. Build knowledge, not just FOMO trades. Follow experts who talk logic, not hype. Understand global macro trends, not just local noise. And most of all, stay consistent. Because when this storm passes, and it will, there will be two kinds of people. Those who waited, and those who prepared. Which one will you be?